Hello and welcome to the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Darshan Mehta. First, let's take a look at the headlines. The Indian markets trade with a positive bias, with the broad markets in tandem. Open interest surges in Godrej Consumer Products as the traders take fresh short positions in the stock futures. Axis Bank hits a lifetime high in early trade after reporting a strong set of numbers in the December quarter. Yes Bank gains nearly as much as 6% in early trade after the two founding families buried the hatchet. After a decade, each will be appointing a director on the board. And Indian Oil Corporation, ICICI Bank, Bajaj Auto and NTPC are the four nifty companies which will be reporting their numbers today. Let's take a look at what's happening as far as the market is concerned. The Nifty is absolutely flat as it can be. It did manage to open strong but now has cooled off significantly from the highs of the day. If you're looking at the open interest build-up and the rollover at 38% for the Nifty. So there is trend on, so it's in line with what was anticipated. Pull up the Nifty Bank and see where positions are being taken on the Nifty Bank. There too the rollovers are up almost 36% and it's up almost close to 1%. Where are positions being taken? You're seeing that 10,700 right up to levels of 11,000 is where call writers are extremely strong. And from 10,700 to lower level is the put writers which are active in trade. Let's see what happened in today's market. Since the IVs are coming down, positions are being taken at lower levels. So at 10,700, put writers are writing in today, but at higher level positions are getting closed. Stock specific, let's take a look at some of the counters in which there is high open interest build up and where traction is being seen. Oracle Finance open interest build up of 30%, that too on the short side, and BEML is seeing open interest build up of 4% on the short side. These two on the Jan series only. As far as the others are concerned, United Breweries, let's see, it's down in trade. Most of the counter apart from Lupin are trading down in trade. So those are the stocks that we need to watch out for. But before we move on, let's take a look at some of the stocks that we will discuss in today's trade. Axis Bank came out with a strong set of numbers. HCL Tech has cooled from the highs of the day. But what's the sense going ahead? Strides Pharma, very interesting moves coming in yesterday. What's the chart looking like? Godrej Consumer is down in trade and CEAT is down in trade post the numbers. What should traders do on these counters? That's something that we will ask our guest. But before we get our guest, here's a reminder. If you have any queries regarding futures and option market, you can call us on 02245404141 or write to us on Twitter, Facebook with the AskBQ hashtag. You can also write to us on the YouTube comment or YouTube in the comment section. Let's welcome our F&O experts for the day. Gaurav, Bissa of LKP Securities and Navneet, Daga of Yes Securities join me on the show. Good morning to both of my guests. Thank you so much. Navneet, I'll start with you. Good morning. What's your view on the Nifty? What's the trend you're seeing and what are you advising your clients?
Hi, good morning. Nifty, to my understanding, we are currently standing at a middle of a trading range. We have seen this whipsaw happening and the wild gyrations happening almost on a daily basis now. So on the higher side, we are seeing extremely high, strong call writing happening, and there is no major traction. The market breadth and isn't catching up. Neither the FI data has been very supportive. So to my understanding, it's likely to face a lot of hurdles on the higher side of somewhere in the range of 10,750 to 10,800, and we have got a very important event coming up next week. So it's looking likely that for this expiry, that range of 10,750 on the higher side for the next 2 days is likely to hold down. On the upper side, will face a lot of resistance out there. But to my understanding, 11,000 to 10,500 is a broader trading range, and that's where one should, if we are flirting towards one end of that trading range, one should look to create buying positions at 10,500 odd levels. And similarly, markets gets heavy once we move towards that 11,000 mark. So at the current positions, it would be kind of a neutral stance on the Nifty at this point.
Okay, neutral stance for the Nifty. What about stocks? Which are the stocks that you would be looking at?
Look, at this point of time, what the best strategy is basically to keep on finding on the stocks which are forming a kind of a relative underperformance to the markets, and they're not participating on the upside. A few stocks which have been tracking and whereby we have seen a lot of open interest build up and as well as chart breakdown happening. The stock like BEML, we have been looking at somewhere in the levels of somewhere near to 930 odd. It's cracked down to almost 800 levels, but still merit to be on the short side of this trade, whereby one can initiate a Feb futures in the level levels of somewhere near to 795 to 805 levels on BML. I'm looking at a lower side target of somewhere near to 740 and keeping a stop loss on the higher side of 835. Similarly, other stock which we are having in our radar is basically Escorts, which is again broke down from a higher levels of 730. So to my understanding, it's again a good stock to be on the short side of a trade. Any strength in the market should be used. Any pullback in the market should be used to create shorts in this counter. Looking at an immediate target of on the downside of somewhere near to 600 to 610 levels, with a positional stop loss on the higher side of 685.
Navneet, just a word on Escorts. It's corrected significantly. It's down almost 30-35% from the all-time high. Even after the numbers, it has corrected. What strategy should one employ? Should it be short mainly at this level, or are you anticipating a bounce back to higher levels, and that is the level that traders or investors can take a short on Escorts?
Look, the entire auto sector has been under pressure. We have seen accumulations of shorts happening across the board. Escort is a good momentum counter to be on the short side. It has seen a breakdown, but I'll see somewhat a bit of a bounce on the higher side of somewhere near the levels of 665 to 660. That's where one should be comfortable to be on the short side. That's where I say that basically I'll keep a stop loss on the high side of 685 to 690 range. That range, I guess, would be now a key hurdle zone for that stock. And I'm looking for this stock to retest its lows, previous lows in the recent months, which is somewhere in the below 600 levels. So my positional target would be on 600 levels on this Escorts.
Okay, Navneet, you have an interesting strategy on the Nifty Bank. It's a ratio bear spread strategy. Can you explain what this strategy is for our viewers?
Okay, let me first explain the strategy. Ratio bear spreads is a strategy one should use, whereby you see a lot of skew in the market, whereby you see a lot of out of money put options are getting very expensive, but simultaneously you have a view that the market would be a kind of a bias towards the negative side, and but to a certain extent. So that's where you should use this kind of a strategy. I'm recommending the strategy for the next week, that is for the Feb series, 7th of Feb weekly expiry. We buy in the money put options at 27,000 put options of Bank Nifty, which is cheaper in terms of comparatively implied vols, and simultaneously selling a 2 lots of 26,500 puts. The spread at this point of time is happening in the inflow, in the range of around 10 points to 30 points as an inflow. And I'm expecting if the markets move towards 26,500 levels and it stabilizes near to that level, that's where the maximum profit is. On the upside, you don't have any since there is no outflow on the strategy, there is a fixed profit of almost 10 to 30 points, which is you're getting as an inflow. And on the downside, maximum on the break-even side happens starting below 26,000 levels. That's where one should keep a strict stop loss. And on the Fed futures, if we move towards that level of 26,000, that's where one should look to exit the strategy.
Okay, so that's the ratio bear spread strategy that Navneet has indicated. So basically, he expects it to be range bound, but with a slight negative bias. Gaurav Bissa also joins us on the show. Gaurav, good morning. What's your strategy for the indices? What's your view?
Good morning. As far as the indices are concerned, Nifty has a decent support at levels of 10,600, 10,620, and we are advising our clients to buy on dips. There's a strong resistance that we are seeing at levels of 10,750 that has been acting as a strong support since last week. Once that was broken, it has now become a very strong resistance. To have a better risk reward, it's always prudent to buy on dips anywhere towards the level of 10,630, 640 can be bought. Stop loss of 10,600 on the upside, 10,720, 750 can be expected. As far as options are concerned, one can buy a 10,700 call option around at levels of 25. It's quoting at 35 odd levels. So you buy on dips, keep a stop loss of 10, 15 rupees on the upside. 50, 55 is what I would be expecting by expiry. For Bank Nifty, it has bounced back from 200 DMA yesterday, but the fabric is still weak. There's a lot of writing happening in out of the money call options. I would recommend buying on dips with strong support at level of 26,450, 500. So any dip towards those levels around 550 can be bought. But at these levels, it is going to be quite volatile and quite risky.
Okay, Gaurav, stock specific, which are the stocks that you want to recommend for today?
First recommendation will be buy on Bharat Forge. We have seen around 3% correction happening in one hour of the trade. It has bounced back from the support levels of 470. Last 4 week candle has a low of levels of 470. A bullish ABCD pattern on weekly charts. A lot of positives are coming in the name. One can keep a stop loss of 472, 473 on the upside. 505, 510 is what I expect in this name. Second recommendation would be sell on BPCL. It has been struggling to hold on to the rising trend line support level of 343, 344. Given a close finally, about 2% short position is seen getting built in one hour of the trade. If you look at daily charts, head and shoulder breakdown has already been seen. It can head towards a level of 330, 325 with a stop loss of 345. One can sell BPCL for this week.
Okay, those are the stocks that's been spoken about. Let's get in some of the stocks which are buzzing in trade. Obviously, the big one has to be Axis Bank. Hit an all-time high today, was up about the 700 mark in trade. Will this momentum continue? And that's the question that we'll ask our guest at this point of time. So, Gaurav, I'll start with you. Axis Bank, what should one do? It's already up almost 4%. Does it make sense to take positions in Axis Bank at this level? And a follow-up question, seeing Axis Bank move, would you recommend taking positions in ICICI Bank also?
The first question about the Axis Bank at these levels, I would not recommend buying Axis Bank at these levels. It has already moved quite a bit from 650 yesterday to around levels of 700 today. So 700% move has already been seen, and I would not be too comfortable. But if somebody wants to look for a position view, then any dip towards the level of 665, 670 can be used for buying opportunity. 640 would be stop loss, 725, 730 would be the target. The risk reward here is not that favorable. I would not be too keen in either going for a positional trade or even going for a day or a 1 or 2 day kind of trade in Axis Bank. As far as ICICI Bank is concerned, yes, that can be bought. Again, it would be a positional trade. It has been trading a rising wedge. We saw some amount of shorts getting built in the last couple of days. It went towards 340, bounced back from the immediate support area of 340. So this is looking decent. One can buy here. Stop loss for this would be 352, 353. The breakouts would be seen around levels of 375, 360. Those are held, even 400 would become a possibility. So as far as positional trade is concerned, ICICI is in much better shape technically and data-wise compared to Axis Bank.
What about you, Navneet? Axis Bank, what's your strategy? And also, if you can add in what should one do in ICICI Bank?
Look, on Axis Bank, I'll say that what is the time frame that one is looking at? If you're looking at a bit of longer time frame, it's an absolute amount of buy to me. It has seen a multiple amount of tops in the range of 670 to 660 odd. It is able to break that. But if you're looking for a very short-term trade that is in a kind of in 5 to 7 days or so, I guess it's a history where we have seen a lot of gap ups and gap downs. We have seen a lot of reversal in this stock. So I'll not chase at these levels. I'll wait for a downside, kind of in a level somewhere near to 660 odd. If you're getting an entry point, but the overall setup for the stock is looking likely much higher levels are coming in this on the stock and going forward. So it's kind of a bit of a buy on dips, or either you wait for patiently to get an entry point in the range of 660 odd, whereby if you got a positional targets, it's looking likely that it has got a merits to cross about the levels of 740 to 750 mark as well.
What would you do, Navneet, on Godrej Consumer, because that's down 5%. Obviously, fundamental reasons supporting the weak earnings growth that came in yesterday. It's down 6%, not one of the cheapest stocks, at least FMCG as a basket is not cheap. It's trading at almost 40 times next year earning. So that's the fundamental view. On the F&O or the technical side, is there more shorting possible?
Look, already the stock has been hammered from almost at levels of 800 levels to 710 odd. To my understanding, it has seen a kind of an accumulation in that range of 800, and once it breaks down below that level of 770, we have seen a kind of a free fall happening on the stock. It's looking likely that it is not stopping out there in an immediate term, but shorting again at a very oversold zone would not fetch a kind of a risk return on the stock. So to my understanding, I'll wait for somewhere in the close move towards that 740 odd mark, and then like to initiate a short with a stop loss of 760 on the high side. But at this point of time, it's looking like a no man's land. You should wait for a bounce to happen on the stock to go short on.
Okay, Gaurav, what's your view on strides? Now, couple of things. Yesterday results were in line, but the corporate action came in. Post the numbers, the counter did move up. Then post the numbers, and this announcement, the counter corrected significantly. Then it bounced back. So it's been all over the place. There's no clear indication that you're getting on strides. If at 507 someone wants to take a position, should they buy? Should they sell? Should they buy? Should they short? Or should they stay away?
I think for time being, one should stay away. It gave a breakout. It's yet to retest the breakout levels. They are coming around levels of 485, 490. So for me, and a 10 rupee dip, 10, 15 rupee dip would make it lucrative. Then one can go long. Small stop loss of maybe 2% on the upside. One can expect again retest of 550 coming in. So for now, this is not the name I would be too interested in. But if somebody wants to play in a similar space, then Lupin is one that is looking a tad bit interesting. It has a resistance at 870. If it sustains above 870, I think with a stop loss of 850, 855, one can buy a Lupin for target price of 920, 925.
Navneet, HCL Tech came out with a decent set of numbers, opened up almost 4%. It's cooled down to it's just up 1.5% now. What should one do? Is there a potential of accumulating because you're getting it at a lower level than what it happened at the start of the day, or are you seeing the negative divergence take over for the counter?
I was looking at this chart. It's looking quite encouraging. To my understanding, it might see a bit more of a cool down somewhere in the range of 980 odd. But it's looking like there is a good accumulation which has happened. I've seen kind of a breakout which might take place above 1,000 odd levels. I would be looking at a buy and dips on this stock, and overall. If I look out the mid-cap IT or kind of an IT pack has been kind of a rank out performer in this market, and this stock looks to be in a good shape, and look for an accumulation in the range of 980 to 990 zone. Looking likely that there much higher targets are still possible on the upside.
Okay, that's the view that's coming in. CEAT is another interesting stock that has fallen significantly post the numbers that came out. Is there more weakness? And remember, the numbers came out 2 days ago. So today it's follow-up selling that's seen on CEAT. Gaurav, CEAT, is there more potential downside? And any other tire stock that you're seeing a similar negative trend coming in because of what we're seeing in CEAT?
First, CEAT has more potential to fall. It has immediate supported area, a target of 8,075,000 area, the levels where some amount of a minor support is seen. Below this, the stock can even head towards the low of 1,020, 1,025. So for me, it would be any jump in the name can be utilized to build fresh short positions, as you mentioned, is down from a level of 1,200 to around 1,080 in a matter of days. So we have technical bounce back can be seen, which can at least trigger a stop loss, and then the downtrend may resume. So it is weak. Use rallies to create fresh short positions. As far as other names are concerned in the similar space, Apollo Tire is one that is looking weak. It's seen strong correction from levels of 220. So this is one name. Any jump towards 210 can be used to build fresh shorts. On the downside, it has a potential thresholds of 195, 197, and if that is taken out, a stronger breakdown, much worse than what we are seeing in CEAT, can be expected if it trades below 190 on a daily basis.
Syndicate Bank is the other one. Open interest build-up is decent, almost close to 20% open interest build-up, but the counter is up 5% in trade today. Gaurav, would you venture a buy in Syndicate Bank?
No, actually, it had given a breakdown below levels of 37.5, 38, and these are the levels it is trying to replace those levels. I would be a little bit skeptical. Let it sustain above levels of 38, 38.5. Then I would be interested in buying, because once the stock touches the breakdown or breakout levels and fails to cross those levels, it generally results in a fresh move in the same direction. So I would be a little bit skeptical. I would not be too interested in placing a trade in Syndicate Bank at this point in time.
And that counter, after holding on strong, has fallen. It's down almost 4.5 to 5% now in trade. Navneet, Gaurav, can you see the trend on Piramal Enterprises? I'll come back to you. Is there more downside that is possible?
If you look at the Piramal Enterprise, we are seeing good amount of shorts getting built. It has given a breakdown, and yes, there's a potential of further downside coming in. The immediate supports are seen at 2,000. If it breaches 2,000, then severe pressure can be expected, and it can head towards level of 1825, 1850. So for me, if somebody wants to create fresh shorts, certainly a risky trade, short it below 2000, keep a stop loss of 2035, and downside 1850 is what I would be looking out.
Okay, that's the view that's coming in. Before we stop the show, before we end the show, in fact, Gaurav, anything interesting that you're spotting apart from the stocks that we've discussed or the counters that you've recommended? Anything else that looks interesting?
Something like Dr. Reddy is looking a little bit interesting. It has been holding the breakout area for 26, 25, 26, 40. So one can keep a stop loss of day low on the upside 27, 25, 27, 40 is what I would be expecting in Dr. Reddy. It has not fallen too much. So even if there's a volatility that we are seeing in the market, this particular stock might hold a bit. And another one would be McDowell. It has given a bounce from levels of 538, 540, very strong support area. Bullish ABCD pattern is seen in this also. So targets would be around 590. Stoppers can be 545.
Okay, that's the view that's coming in. Some other counters again, metal stocks have started to rebound. Tata Steel has moved up, NMDC has moved up. Anything in the metal space that you like, Gaurav?
Metal, I was quite bullish, but I would give it some more time. They are not doing that well. Names like Tata Steel are near support area, so they are looking interesting, but I would give it some more time. I would rather buy at breakout levels rather than anticipating whether there will be a breakout or not. But among the auto names, Maruti is one that I would like to share with you, but not at these levels. 6,600, it's quoting at 6,550. If it manages to hold above 6,600, a 150 rupee up move in 2 days can be seen. So for me, it's a buy above 6,600. Stop loss of 6,525, target of 6,750, 6,800.
Okay, Gaurav, we leave it at that time. Many thanks to both Gaurav and Navneet for joining us and giving us all the perspective on the F&O stocks. Pull up Bajaj Finserv. The company reported numbers after market hours yesterday, and they reported a healthy set of numbers for the December quarter with some pressure witnessed in the bottom line for at least the insurance companies. What also helped them was the strong numbers for Bajaj Finance. To help us decode the earnings of the quarter gone by in further detail, we're joined by the Chief Financial Officer, S. Srinivasan. Mr. Srinivasan, thank you so much for joining in. We know about the strong performance that came in on Bajaj Finance, but for the insurance vertical, if you're looking at it, there was healthy performance in terms of top line, but the profitability of the insurance businesses, both for the life insurance and general insurance, was much lower. What caused this?
Let me take both separately. On the life business, we are quite happy with the growth. There has been generally a slight slowdown on the higher ticket ULIP business, the market link business, because of the uncertainties in the market. This is across the market, and we have done much better than the market as a whole on our individual rated premium. Our life business is not a P&L business, and it is more about new business value, including the profits that you will earn in future. We are quite happy with our performance on that count. By the end of the year, we'll be announcing our new business profit as well as our new business margins. And we are hoping that barring unforeseen circumstances, we should report a healthy growth in both of them. So on the higher base, a better margin and better NBV is definitely the right way to go. And we think the business as a whole is now turning around, has turned around, and we are looking forward to the next 3 years with a lot of optimism. In terms of general insurance business, this quarter, yes, the profitability has been a bit lower. There are a couple of reasons for that. We did have to make a provision for an exposure in ILFS of 24 crores. Apart from that, we have had some segments where there has been a slight increase in loss ratios. But more importantly, we have made a lot of investments because we have a substantial number of bank assurance tie-ups. And we have made investments in manpower, in technology to support the business. And that will continue over the next 2 quarters. But the business continues to be on a sound footing. The combined ratio at 94% is among the best in the market. We still continue to be one of the most profitable general insurers in India.
Okay.
Overall, we are quite optimistic about the businesses. This is not a one-quarter business, and I think as we go on the next few quarters, we are hoping to see even profits coming up better from here.
Okay, let's split it up. Let's talk first about the life insurance business. Individually focusing on the life insurance business, what can we expect out of this business over the next few quarters?
See, this is the coming quarter. Q4 is very important for life business because that is the time when the industry as a whole does a lot of business due to the tax season. Because of the uncertainty, I think people are holding on, especially on the ULIP side, waiting for election results, and generally there is volatility in the market which is range bound. I think people are waiting to see. Therefore, on that segment, we do expect it may not be, it may be a sort of average performance, but we have a well-diversified product mix. So today, 40% of our business is from traditional products where we are seeing very strong traction, and the ticket sizes are also improved over the last year. So we think we have a more sustainable product mix to weather this cyclical change. But overall, I think more than in about 6 months' time, things will improve substantially even on the ULIP side. When the elections are behind us, we do hope to see renewed optimism in terms of savings and growth for the life insurance business.
Okay, what about the general insurance business, sir? What's the expectation there?
General insurance, we have grown very well, as you have noticed, 35% growth YOY. Clearly, when you grow, the acquisition and expenses are written off upfront while the premium gets earned over 12 months. So there will be some effect of that in terms of the earned premium. However, in terms of growth, we are quite optimistic. Yes, for the last few years, we have seen capital investments generally not being as good as we would have liked it to be. So till that turns around, general insurance business will be under pressure. But there are many lines. Health insurance is growing very well. We are seeing other personal lines growing well, mobile insurance, extended warranty insurance. Even corporate insurances are growing quite well, property and other than project-based. So overall, we are quite optimistic about general insurance business. This industry generally grows at 10% in a bad market, when the macro is not that great, but it does grow at 20% when growth rates are good. So overall, again, we will wait and see, but we are very optimistic about the general insurance business.
So in the general insurance, how will the trend shape up, or what will the ratio going ahead be for the non-crop insurance segment compared to the crop insurance segment?
See, the way we look at crop insurance is more tactical because it is a tendered business every year, and the rules still are getting updated every year. So every year we look at which markets we want to be. We look at the pricing, the available reinsurance support, and go for it. This year in the first half, we did not do much crop business because in the Kharif season pricing at our prices we could not match the market. However, in the Rabi season in Q3 we have picked up some business. So this is a tactical thing. So our focus largely on the ex-crop business, which is renewable, customer comes, customer stays with us, we can cross-sell. So that kind of business we'll continue to focus, and we are already doing, last 17 years we have been doing a very good job there. We'll continue doing what we have done well.
Okay, and my final question before we end, Mr. Srinivasan, what is the run rate that we will see, at least as far as the new business premium is concerned, for your life insurance business?
Pardon, what do you mean by run rate?
How do you see new business premium moving? What kind of growth do you see?
I think next 6 months there will be a little bit of uncertainty because of the market link business. We don't know which way it will turn out in the tax season. But otherwise, our objective is to grow our individual annualized premium market share. We have been doing that quite well over the last 2 years, and we will try to claw back some more market share over the next 2 to 3 years.
Okay, Mr. Srinivasan, we'll leave it at that. Many thanks for speaking to Bloomberg Quint, and all the best for the quarters going ahead.
Thank you very much.
Thank you. So that was the management of Bajaj Finserv. Decent set of numbers, but a lot coming in from Bajaj Finance also, the business that grows, and they have a substantial stake in Bajaj Finance. But with that, it's a wrap on this edition. If you want more information on the F&O side of the market, visit our website, bloombergquint.com. You'll find all the details there. With that, it's a wrap on this edition of the F&O Show from me and the entire team making this show. Thank you for watching. Stay tuned to Bloomberg Quint.
Mm-hmm.